I'm Adam Myers, the Portfolio Specialist for the Pengana WHEB Sustainable Impact Fund. This fund invests exclusively in companies which produce goods and services to address sustainability challenges. These are the kind of companies on the right-hand side of the slide, and the profit and revenue of these companies grows in lockstep with better social or environmental outcomes. They represent about 15% of the listed equity universe. So although the benchmark of the fund is the MSCI World Index, the holdings of the fund are very different to the index, so the performance should be expected to be different too. Companies addressing sustainability challenges have a natural tailwind supporting the growth of their businesses. In investment terms, we call these growth stocks, and we often anticipate growing revenue streams into the future. In a rising interest rate environment, investors often prefer to hold companies with more immediate cash flows. So in the short term, we've seen a pretty significant re-rating of some of the holdings in our portfolio. That said, we still believe that the longer-term environment is very favorable for the stocks in our portfolio, as well as our style of investing. I'll give you a few examples. KION is one of the leading providers of warehousing equipment and technical supply chain solutions. These solutions generally take a long time to implement and are priced at the time that the contract is awarded. The supply chain bottlenecks, coupled with significant cost increases due to the inflationary environment, has impacted short-term margins, and this has led KION to withdraw its profit guidance for the current financial year. A few of their competitors have posted profit warnings. But longer term, if anything, the drivers are strengthened. The supply chain issues are highlighting the need for KION's products and services as just-in-time ordering gives way to just-in-case inventory and local manufacture. Orders for their products are up significantly. So notwithstanding the current headwinds and the impact that these headwinds have had on the share price, we believe that the current environment actually improves KION's positioning for the longer term. Advanced Drainage Systems is one of our top conviction holdings, and it's a very impactful business. Global warming brings more extreme weather events, and the need to manage the impacts of these continues to grow. It's also a great circular economy story. It's the second biggest recycler of plastics in the US. But for its business to operate, it has to transport huge plastic pipes across America. It normally relies on its own fleet to do so, but since the start of COVID, it's struggled to find drivers. So it's had to rely heavily on outsourced logistics providers, and then it's just been part of this trucking congestion. But it looks like for now, particularly for land-based transportation in the US, some of the congestion issues are starting to work their way out of the system. ICON is a business which performs clinical trials for drug manufacturers. This sector received significant funding during the COVID pandemic, and there are now fears of a downturn in the funding cycle. More recently, investors have also favored medical companies in elective fields as the performance of these businesses was suppressed during COVID. We naturally prefer the science-based companies, which are more impactful. But contrary to these fears, in its recent analyst day in March, the company actually increased its medium-term growth forecasts as well as its margin targets. ICON's a fantastic business. It continues to focus on innovation and improving the trial processes, and this can drive down costs, and those savings should pass through to consumers in the form of lower drug prices. This is an example of a business where the current and future fundamentals are very much intact, but there's been a short-term disconnect between those fundamentals and the market prices. I would also like to mention Power Integrations. This is a semiconductor business. It's a more recent purchase. Its hallmark technology is called EcoSmart, and what that does is it actually acts as the brain for the power supply of our appliances, so they only draw power when needed and shut down when there's no load. It's estimated that products in sleep or standby mode account for almost a quarter of our energy consumption in an average home. On a cumulative basis, this technology has enabled power integrations to save the equivalent usage of 2 million homes worth of energy consumption. WHEB, the managers of this portfolio, are also recognized as leaders in impact measurement and reporting. This graphic is based on information from our 2020 impact report and represents the positive impact associated with $1 million of investment in the fund through 2020. Our 2021 impact report should be out later this month.